Everyone, welcome to Average Money Works. Today is November 12th. So yesterday I just posted a video of this option play that I got into, and today I'm gonna get out of it because it's already up by 98%. So I'm basically gonna make all the money that I got up front for this option. As you can see right here, 98% profit. I got paid 50 bucks to close it. This spread right here is kind of crazy, so we'll see how much I actually get off of it, but we'll see. And then you guys really just got to see me make money in a day, 50 bucks almost in a day. So that's just some things that you can do in the stock market, real simple. Not even, you don't really have to do anything. I literally just bought this option like around this time yesterday. Then I went to work, went to sleep, went and did a couple things, came back, and I made 50 bucks. So I'm gonna go ahead and try to close this option real quick. Actually, I'm buying to close, so making sure you're doing the right thing. Let's see if I can do it for $1. So it's gonna make me pay $5 just because it's Robinhood, but we'll see. So I'm gonna get my $1,800 back that I had to put on hold basically to get this done. I'm cool with closing it now just because if tomorrow the market, like right now, the market's dropping, as you can see on this chart. Let me go to the 30-minute. This is basically today. The market's been dropping just because of like all this news that's coming out. So I don't want to take that chance and have this thing come all the way down. Just collect my money and run basically. So that's how options work. I got paid to open up this option. I got paid $50 right here yesterday and today because this stock, because of the price of this stock went up, and because one day went by basically and expires tomorrow, the value of my option went down. So that's how I was able to make money off of this. And I spent $2 to close it, so I got basically $47.98 because I don't know why I did all that weird stuff. But all right, so basically what I just did there was the wheel strategy, and to kind of like put this visually, let's say you go to the store and you buy a TV. This is a TV. That doesn't look like a TV. Let me redo this. I ain't no artist, all right, but let me try to do a better looking TV. Like, this is a TV. This is the stand. So just pretend that's a TV, all right, and you buy it for $200. Then let's say you go onto like Marketplace or OfferUp, and then you sell it. You put it on sale basically, so you don't sell it, but you're just waiting for somebody to buy it, and you're selling it for $300. So you're looking to make a profit of 100 bucks. Okay. $100 profit. Now, basically that's what the stock market is. You want to buy it at one price and sell it at another price. So that's all the stock market is, buying and selling shares, and the way that you profit long term is by buying when the price drops and selling it when the price increases. And you're just selling it back to the market. So you're buying and selling just like people do at the store, Jordans, weights, all that good stuff. So the difference between options, which is what I did, was, let me scroll down real quick. So the difference was with options, I'm writing a contract. So my contract, what I did was I was saying I will buy. So I didn't actually buy the shares. I just said that I will buy them for $18 a share. But the trading price at the time was, I think, 21 bucks. So no one's going to sell me their shares for $18 because they can sell it for $21. So I had to keep that cash there just in case it drops below. And then if I was to, so let's say it did drop, then I'd have to buy them. And then what I would do if I had shares was I would put my shares on sale at whatever price I decide. So let's say I only want to make $100 off of this play. So if I have to buy my 100 shares, now I own 100 shares, and then I'm trying to sell them, putting them on sale basically like on Facebook Marketplace for $19. So I'm looking to make a profit of the same as the guy who's trying to sell the TV, trying to make $100 profit, and the reason why it's $100, even though this is a $1 move, is because I'm having 100 shares on sale. The difference between options and just selling it, though, is the premium paid, or the premium that I got paid up front, which was at $50. So unlike just putting it on sale on Marketplace, this is basically like Marketplace, or Marketplace paying you just to put it on their platform to sell. So I got paid $50 from the market to put my shares on sale for $19. So I'm looking to get paid two different ways here, right? So if the price doesn't go to my price, then I get to keep the $50 and I keep my shares. And then next week, I can do the same thing. Get paid $50 to put my shares on sale for $19. And basically you just do this every week until the shares hit your price, and then you actually get to sell it and make $100 off your sale, because in the beginning you bought it for $18. So right here, if I did it like this and it took me 2 weeks to sell it, then I actually made $200. Unlike this guy up here who only made $100. So that's the main difference between just buying and selling shares and buying and selling contracts. So obviously contracts, you need more money. So if you can do the share price up or originally, and then once you make a lot of money off of that and you build up enough capital, then you can start being able to afford doing options. So if you guys have any questions on that, let me know. Let me go back to my account, actually right there, so you can see. So it's all my entire account is now all buying power, as you can see, and I basically made $47.98 in 24 hours. So that's amazing. I'm gonna go ahead and put that in my Excel spreadsheet. I'm starting this over just because I'm restarting this entire thing. So exercised, I did not get exercised, and basically what that means is I had to sell or buy shares. So $47, I'm gonna put what I got paid. Total profit is also gonna be $47, and because it's the end of the week, I don't think I'm gonna do anything else for this week. So pay myself, let me do this math real quick. Pull up the calculator. So I'm gonna take 60% of $47 and basically withdraw that money into my personal account. 47 times 0.6. So $28 I'm gonna withdraw. And I'm gonna put that towards, an extra $28 towards one of my payments that I have to pay each month, or that's gas money, and then the remaining is gonna stay in my account. So it's gonna look like when I take that money out, it's gonna look like I only made $19 this week, but that's why I have this here. So by the end of the week, this is what my account should look like, and total profit is $47.98. So it rounded up to 21.48. That's fine. And I need to put this percent here. So so my account's up 2% right now. Or I'm up 2% basically on this whole thing. There we go. Let me redo this too. So it all looks the same. Come on, there we go. All right. So far my account's already up 2% in just one day. That that doesn't happen every day, every week, but basically that's how this whole thing works. Right now I have $47 of profit. I'm gonna keep 19 in there. So what I could do is look for something to put my $19 in. Like I had said before, I like MGM. That's just one of the stocks. Everybody has their own stocks that they like to invest in, depending on what you like to do. Like people who have iPhones, they like to invest in Apple. People who have Xboxes, Microsoft would be something that you like to invest in. There's no company or anything that, you shouldn't invest in. It all depends on your own personal preference. But if I was to invest, let's say in MGM, and I had $19, the good thing about Robinhood is you can invest by shares. So I can buy one share, or if I only have $19 and I can't afford one share, I can just put $19 in, and I'll own a fraction of a share basically of MGM. So if MGM goes up, I'll still be able to make money off of it, just not as much as the total count, the total value here. So what I might do tomorrow, Friday, I might look for a company to invest in, depending on basically their technicals. And what that means is if I go to like a chart, I can see where they're at. This line down here basically tells me if it's oversold or overbought. It's on its way to being oversold, which is basically a buy point. So it's a good time to buy at that point. But we'll see what happens. The market's dropping. It might drop tomorrow. It might drop over the weekend. So we're just going to sit here and gauge the market and just see what the best play is. But right now I'm just going to hold that money as cash and just basically enjoy my profits. So if you guys have any questions on what just happened, leave a comment down below. I'll get that answered in the next video. Otherwise, thanks for watching, and I'll see you guys then. All right, peace.